Hello, Brad. I'm so pleased to welcome you today to Coming Home, Survive and Thrive in Homeschooling. Thank you for coming along. And I think let's just get going with you telling us a little bit about yourself. How do I come to be wanting to talk to you today?
Well, how long have we got? First of all, Christine, thanks for having me on your show. It's a pleasure to
Pleasure.
be here. So, all right, look, I grew up in a country town in New Zealand, a little country town called Wellsford. Grew up on a farm, and I grew up. So I was, gosh, now I'm revealing my age. I was 16 in 1986. There we go. And my first introduction really to investing was all the hype around the 1980s thing and the lead up to the 87 crash. Um, oh gosh, that's when housewives as such they had these share clubs. No, no disrespect to housewives, but ordinary mums and things I'd get together and have all these meetings and decide what they're going to buy, what stocks to buy, and some of the things back then were companies called like Chase Investments and Equity Corp. Obviously, Briley Investments. Oh, there was a whole range of these high-flying stocks, and back then, of course, um, the CEOs in charge of these companies were like the rock stars. They're on par with like All Black captains and things like that. And that all sort of came and went. But that was my first taste of it, my first experience of investing. And gosh, I remember I got back from holidays in February 87, I think it was. And the stocks I invested in then had gone down by 25% then. I thought, I'm sick of this. I rang my broker and sell out, and I got out. And obviously, little did I know the market was going to crash the way it did. But it's certainly, looking back on things, it was one of the first tastes I had of of staying away for not doing things that are popular with the crowd, staying away from popular investments. And as time has gone by, um, and I've been involved in pretty much in investing all the way through since then, as has gone by, it's just reinforced, my experience reinforces the fact that one should never look for investment opportunities in things that are popular, things that everyone is talking about. Of course, right now it's the whole AI thing, and little bit of time ago was Bitcoin and cryptocurrencies. But yeah, so that's it. And to make good money, you buy essentially boring things that have been left behind by investors, unloved, unwanted, and that's the so-called easiest way to make money. Um, so yeah, that's a bit of an introduction I had to investing, and then I um, went to Massey University in Palmerston North and did a Bachelor of Business Studies, BBS back then, the good old days. Then I worked in Auckland for a while, and then I went on my OE. But instead of going on an OE, the classic OE to the UK, I went to South Africa. Classic contrarian. I don't know what possessed me, but anyway, I went there in 1997 for a Kontiki tour. It's supposed to last for 2 weeks, and I left there 10 years later. And it was one of my most fantastic times of my life. But yeah, that's when I really got involved in managing money and trading international markets. And to this day, that's what I do. I run a fund, investment management firm called Glenorchy Capital, where we look after investors' money. So we've got about oh gosh, about 750 clients, about well, it must be like a almost $1 billion New Zealand dollars under management now. Yeah. Yes, I do have to pinch myself every now and then. And I
Wow.
work from my home office in the high country in Victoria in Australia. We're very close to where The Man from the Snowy River was filmed. And you can see behind me, it's Craig's Hut, which is not, well, as a crow flies, it's not too far from where I am. There we are. That's my story.
Oh, cool. All right. So it sounds to me like you've always been in finance and money right through your adulthood, even as a teen by the sounds of it. Because I
Yeah.
think you said you were 16 when you started. Gosh, that
16, yeah.
wow. Okay. So you've also
Hmm.
seen a lot of things come and go, including recessions and booms and busts. So it
That's it.
is, it behooves us to listen to experience. It really does. So what I really wanted to hear from you today, Brad, was regarding Bitcoin.
Yeah.
I did interview someone a month or so ago, and really we got the really good reasons as to why you should buy Bitcoin and why it's the future and it's going to do a lot of things, which may or may not be so. But I think really to be fair, we need to hear other points of view for a subject that potentially takes a lot of time and money from people. And I just think it's a good idea. Learn everything you can, everything for it, everything against it, so that you can make the most informed choice possible. So, given that this is a homeschooling podcast and
Yeah.
the very nature of many of, well, to be a homeschooler, you really have to be a contrarian. So, it's not going to be new to the people that are going to listen to you. I will say that you don't have to take the time to explain about a debt-based currency or anything like that, because that's kind of a prerequisite that I've made quite clear that the
Yeah.
young ones need to do, unless you feel it's relevant. So, from wherever you want to start, if you could start pointing out things about Bitcoin, don't worry about the other cryptos so much, but what about
Yes.
Bitcoin that you would suggest a cautionary thing, things to think about. Take note of this, read this, think about that. How would you address that?
Okay. Well, I think there's two sides to Bitcoin and perhaps cryptocurrencies in general. So there's the transactional side for Bitcoin, and then there's, of course, there's the actual value that one places upon it, i.e., trading in Bitcoin, trying to make money out of it through speculation or investment or however you want to call it. Now, um, it seems that Bitcoin, that there is merits in the whole cryptocurrency thing as a medium of exchange. All right, and that would go for other and is it crypto or is it Bitcoin or is it the blockchain or whatever? There's something there. There's absolutely no doubt that there's something there. I'm pretty sure of that. Um, however, fine. That's all well and good. But then actually so-called investing or speculating in crypto, and let's take Bitcoin as probably a proxy for crypto in general, that's a whole different story. And what value does one place upon Bitcoin? Um, gosh, look, again, all I can really go on is look, first of all, when everyone's raging about something, one has to be very, very careful. And if I can say that in straightforward language, stay a mile away from it. Okay. Um, Again, it's very, very difficult to put a value on Bitcoin. It's only a recent phenomenon. Gold is something else. It's been out there for, since millennium as such. So I don't know really how to value Bitcoin. I can't really get my teeth around it. Sure, one can get a hang of the whole crypto thing for as a medium of exchange, but how do you actually value that medium? That's a whole different story. I just go back, Christine, to all experiences I've had. Um, when things are booming, everyone is raging about something. Give it time, be it 5 years later or 10 years later, whatever. Um, the value placed upon that market, item, security, etc., is dramatically less than what it was. Now, it's not just my experience in trading in markets, be it currencies, be it commodities, be it stocks. It also goes back to my experiences in farming. Now, I can recall, and this is going back into the 80s, when at one stage, deer farming, venison was all the rage. Remember those when they're going and catching deer with helicopters and the Southern Alps in New Zealand, and then the price of deer took off. It was incredible, and then all of a sudden it collapsed. Everyone was putting up deer farms and deer fences, and it collapsed. Then at one stage there was this big rage about mohair. Was it mohair or cashmere in goats? It was a big thing. I think it's sort of early mid 80s, and farmers were diversifying. This is when Labour came in and farming was on its knees, and people were told to try and diversify. Anyway, mohair took off. I think it's mohair. Was it mohair or cashmere? Whatever. Essentially, goats bred for the wool, and that raged at one point in time, and a lot of people made a lot of money, and then that fell away. Then also, let's not forget about kiwi fruit. That was all the rage. All those, exceptionally wealthy those people who made exceptional amounts of money out of kiwi fruit and, places like Tauranga and what have you. And that again would have been probably the 1980s, 70s and 80s. And now that's all fallen away. So these things all come and go. And when people are raging about a market, Ken, call a market what you will, a stock, a sector, a specific geography or emerging markets or whatever, or a commodity, it doesn't tend to last too long and it all ends in tears. So that is what I have got to go with when evaluating Bitcoin. I don't know too much more about it than that. Um, I and so and so okay, Bitcoin, fine, but there's lots of other markets out there that one can invest in. You're not locked into investing in Bitcoin. You can go and buy various different stocks. You can go and buy a coal miner. Why do you want to put your money into Bitcoin when you can go buy a coal miner, or you can go buy a oil and gas offshore oil and gas driller, or you can buy a retail stock or whatever. It's your capital. You've got to invest in. You're not locked into just having to invest in Bitcoin or nothing else. And what we also want to look at as an investor is the relative value. Now you look at Bitcoin now, where's it trading now? 80,000 bucks thereabouts, plus or minus, moves around all the time. And you say, okay, oh, fine. Well, 5 years from now, what is the odds of Bitcoin going to 200,000? Well, it was 120,000 a while ago. It can double. So let's say it gets to 200,000. What are the odds of getting there in 5 years versus something else? Let's say a coal miner, let's say an offshore oil driller, let's say a tanker stock, or one of the various other things we're invested in. So it becomes a relative game. Now, I look at coal miners as an example, most boring as batshit stuff you can ever think about investing in. And yet, the returns that those stocks have made, and you take coal miners in Australia as an example, and if you reinvested the dividends, and you're getting a 10% dividend yield a year, you reinvest those dividends, the returns become quite dramatic over time. Anyway, so that's what whenever I look at a security or investment opportunity and take Bitcoin, I go, okay, fine. Well, let's consider it relative to other investments, and then the answer starts becoming a little easier to. Yeah, so I may not have the answer really to say Bitcoin, what I think about Bitcoin, but I just feel there's other really attractive investments out there that your capital can go to as opposed to being locked up in Bitcoin.
Okay. Mm. All right, that makes sense from an investment making money out of Bitcoin.
Yeah.
What about the other aspects of Bitcoin that is touted? So, for instance,
Mm.
fast transactions. I'm not quite sure what high levels of sovereignty means, actually, personal sovereignty, I suppose. And if you have to leave a country in a hurry and you can't take gold with you, you can take Bitcoin. So, and with also, Brad, from the side of encroaching digital identities coming up and the attachments to all of
Yes.
those, that kind of attachment there. What have you got to say around those aspects of it?
Okay, well, let's go through some of those.
Mm,
And again, so yes, they do have the merits. Um, okay, and for whatever reason you had to leave a country quickly, yes, you have your Bitcoin on your code written on a piece of paper or on a disk or I don't know, thumb drive, whatever. Yeah, fine. That definitely has its merits. Now, um, of course, you can't take gold with you, but then you can have gold stored somewhere. I mean, you can have gold stored in the Cayman Islands in a vault in the Cayman Islands, which I've actually been to see those vaults. Interesting, all by the by, though. So, yeah, I don't. Yeah, yeah, look, yeah, Bitcoin does have its merits like that, um, but with a bit of planning, that shouldn't be an issue. Um, The other thing with, in terms of, like you said, what sovereignty, so no one can touch Bitcoin and what have you. Okay, maybe, but there's on and off ramps too. You can transfer funds in Bitcoin, but you've got to off ramp it into a paper currency, so-called paper currency. And that's where you folks become unstuck. You can't really go and buy a car with Bitcoin or groceries with Bitcoin and so on and so forth. Maybe it becomes more widely accepted, perhaps. Oh, okay, I'll eat humble pie until then, but no, and I, I think folks get a little bit carried away with the so-called sovereignty thing when it comes to cryptocurrencies, purely because you've got to on and off ramp it.
mm, okay.
Yeah, there's some other questions here too, so just fire them through. I'm
Yeah,
not very good at
sure.
recording questions that I ask. I'm trying to also be, um, objective about things, and I don't try and be critical. As I said, the whole transactional thing, the interchange of money with Bitcoin has its merits. Now you say, oh, it's very, very cheap to transfer money, etc., etc. Well, okay, yes, that may be so, but hey, you can transfer funds very quickly these days. Now you take some of these new payment mechanisms like Wise, the old transfer Wise, other companies like Revolut. You can transfer funds exceptionally quickly and for exceptionally cheap rates. So, that whole thing about transferring funds with crypto, being instant, et cetera, et cetera. Well, you know what? I can transfer funds on a TransferWise or Wise account to you if you had a Wise account, just like that, bang,
Mm,
instantaneous, more or less. Now, whether it takes, you know, 3 seconds or it takes, 3 nanoseconds, I don't think that's any big deal.
mm. What about its relationship to the ever encroaching digital identity and CBDCs? And just that one of the pros for it is that it's outside of the system. Have any thoughts on that?
Well, it's outside the system until it has to come inside the system. As I said, you got to buy your groceries in New Zealand dollars or US dollars or Philippine pesos wherever you live. So you got to, it's the on-ramping and off-ramping of it. Sure, I could transfer Bitcoin to you. Fine, instantaneous, bang, you got a couple of Bitcoin in your account, just like that. And it sits in your account, but what do you do with it? Let's say, oh, okay, well, that's great. I want to go and buy Caterpillar stock with it. Oh, okay. Well, you got to get it from Bitcoin into US dollars, or probably Bitcoin to US dollars and into a brokerage account. So that's where they catch you. It's like, yeah, you go. Um, I think it really falls down when you actually have to off ramp the cryptocurrency, actually do something with it.
Mm, mm. If it became easier to transact in Bitcoin, I have heard of some doing it, but I've also seen that it's not straightforward. If it got easier, would that be something that might make you have another look at it? Is there anything else that might make you rethink?
Yeah, yeah. Look, I'd rethink it. It just doesn't really. hold any advantage. Quite frankly, uh, the Bitcoin over holding, you know, dollars or whatever, or pounds. Um, I'm also just wary that perhaps I'm not too wary. Is like, when you start engaging in stuff like that, it sort of attracts the eyes of authorities as well, which you don't really want to. You want to attract unwanted attention. Um, let's not go down that route. Yeah.
Mm.
Again, so I'm trying to be objective about it. It's just, look,
Please, I
well,
want you to
okay,
be.
look, well, as I said, the transactional side has its merits. And we could argue that, okay, fine, you can transact in it, you can transfer funds in it, and it has its merits. And I'm not going to deny that. But I don't think, I think the more of a deal for folks is that they see it as a long-term investment. They see, okay, Bitcoin now is going to go to $1 million a coin 10 years from now, pick a time frame, whatever. That I think is more on pertinent on people's minds than the actual transactional value of it. And that's, as I said, that's the thing I have a lot of apprehension about. I'd rather be invested in. Look, for me, I've always found that buying unloved, out of favor sectors and markets is the easiest way to make good money, as opposed to speculating on what I would call a concept investment. And Bitcoin to me is a concept investment. Um, Investing in what else? Modular nuclear reactor stocks, for example, is another concept type investment. Um, uh, Investing in these AI stocks, I would say, is a concept investment. It's not proven. We don't know the long-term outcome of these things, but we know the long-term outcome of. I remember in days gone by. I remember investing in Fletcher Challenge. It was in the early 1990s when they had debt issues and unloved, unwanted, and making good money out of that. But so that to me is how I go about investing. I think it really comes down to your investing style, investing strategy. As I said, after all these years and experience behind me, the easiest way of making money is buying big, you know, unloved, out of favor sectors and markets, and not what I would call speculating on these new concepts. So I guess it's a bit of a experience coming into it, a bit of a philosophical perspective as well.
Mm.
Now, look,
Yes.
it's not to say that some of these things won't be very, very good investments. They may well be, but just my experience in general is you way more well rewarded by staying away from fluffy things, things everyone else wants to have and is talking about because it's usually way, way overpriced and overdone.
Mm, mm. I think that's probably for the young ones who let's say they're really quite keen on Bitcoin, etc. They might be somewhat disappointed with what your advice coming through, but I think that's part of going into adulthood is having the intentional fortitude to genuinely look at what might be considered, well, the other side of the coin, get all of the information you can and don't be afraid or dismiss that which is cautionary. And that will eventually give you wisdom. Try to learn from the experience of others as wouldn't we all just love for the young ones to do that? But often they have to learn by themselves. But for those that really genuinely want to learn about investing, finances, preparing for not only their own kids' futures, but their grandchildren, their great grandchildren, take the long view. Let's pivot slightly then. I think you've covered a really good and simple basis for being cautious. And you've already gone into the unloved and the unwanted. And I'm personally very familiar with that because I listened to your webcasts a lot. So you're talking now to, let's say, teens, mid, late teens in a homeschooling situation, and they've decided that they want to understand business, finance, investing seriously. Maybe even as a career in it, or maybe just simply as a valuable skill to have. What is a good start point for them, as well as investigating Bitcoin? What else? How would you get them started, Brad?
Knowing what I know now, what would I tell Brad at 20 years old what to do with his money, what to look for, what to invest in? Gosh, buying big, boring companies, paying good dividends and getting those dividends reinvested. I look back, and I heard all this. When I was young, I heard and this is boring as batshit, Christine, this sort of stuff. It's not sexy. No one's going to listen to you at dinner parties and so on and so forth. But that is to create wealth over long term. That's what you do. You've listened to the podcast we've done on the coal miners we've bought and the returns we've achieved by reinvesting dividends. And it's been absolutely exceptional. The same thing for boring tanker stocks, crude oil carriers, unloved, unwanted, paying dividends of 10% plus. You start compounding those, reinvesting those each year. So after 5 years, the returns you're getting is absolutely exceptional when you take into account dividends. Now, I can't tell people what to invest because obviously that thing changes, those variables changes as time goes by. But just buying boring, unloved big companies, paying good dividends, getting those dividends reinvested, and every month just putting more and more money in, not getting carried away by stories about different concepts and so on and so forth. That's what I would tell myself. Hopefully that person I would listen to it. Probably wouldn't, but anyway. But there we go. So what do you do to get started? Look, I think one has, first of all, you have to have a passion to actually want to do it. And it's it is hard. It's difficult. It is time consuming. Maybe not so much time consuming as in physical time, but in terms of your headspace. Um, you're always concerned about what the unknown of the future, etc., etc. All right, so gosh, where to start? Well, I've given my boys, share portfolios and things that I think will do exceptionally well. It's the same sort of thing I wish my dad had done for me. Perhaps my dad just couldn't afford it as being a farmer, etc. No one had any money back in those days. But if, they'd done so and, I would have learned over time the power of compounding and compounding dividends, investing in good companies, earning good cash, uh, that would create immense wealth. So that's what I'm trying to do with my boys, is sort of showing them they actually got their own portfolios, share portfolios, investing in various different stocks, which I think makes sense. I think they'll do, make good money for the boys, but also too, it'll teach them a good lesson by actually seeing it their own portfolio. So you've got to have, I would say, skin in the game to actually learn, like an emotional attachment. Now, there's a myriad of different books and things one could, you know, um, perhaps I can give you a list of books and what have you after this that folks could read. They're easy reads, they're not. And so I guess it's more conceptual books, more conceptual about investing. It doesn't really come down to having a detailed understanding of, balance sheets and P&L statements and things like that, but it's just an elementary understanding of what you're actually paying for in terms of the value of the cash you're receiving. Anyway, I'm probably getting a bit off topic, but there we go. So, yeah, I guess lead by example. So just putting, stocks in a kid's portfolio and a portfolio for a child, and then getting a child to understand what they're invested in, why they're invested in it. Um, One of my boys came to me and said, "Oh, this was actually what sparked it all, he came to me and said, um, Dad, I want to invest in Litecoin. I'm going, oh, are you kidding me? Now, this has to be the top of the market now. And my boys are coming asking me to invest in cryptocurrency. He wants to invest in Litecoin. So, okay, fine. All right. Well, there we go. So I said, okay, well, okay, we'll start up an account for you. So I oversaw him. He opened up his account, a brokerage account, and I gave him some money and said, right, fine. Now, you can invest in 10 things. One of those things, of course, you invest in equal weights. One of those things, of course, was Litecoin. All right. So I invested in Litecoin and I gave him, and then I think he also invested another bit in Bitcoin as well. And then the rest he invested in the things I told him to invest in. It was coal miners, offshore oil drilling stocks, shipping stocks, um, various other ones as well. Oil and gas producers, all those boring things that no one really wants to touch. And sure enough, as Litecoin hasn't done so well, Bitcoin is more or less the same as where he was. We invested, and yet the other ones he invested in, he's making good money in now. So now he's starting to understand how it all sort of works.
Mm.
But it takes time. It takes time.
Mm. All right. What am I thinking of there? I'm thinking when you said to put in 10 things, I think that's probably referring to how you recommend 10% over 10 themes so as you don't become overweight in something. I'm assuming that was in it. Okay.
More or less, yes, yes.
Yes.
Yeah.
Okay, so I'm just thinking, let's say, of a teen who's very keen, but the family doesn't have a lot of money. Maybe the kid's got a part-time job, but wants to get started. I guess they could be asking for birthday presents for an account to be opened. That would be a really practical and wise thing to do. But even in a situation where mum and dad not only didn't know much, but actually weren't very keen on the idea, but Junior is, but they're starting from the bottom. So they're not going to be able to afford to open up an account like say we have just now, but they might be able to aim for something in another platform. How would somebody that had really not very much to begin with, except the desire to learn, start?
Yes, yes. So I think my son, he opened up an account um, where you could buy fractional shares. And so, let's say a share was trading at $500 or whatever, or an ETF was, you could buy a fraction of that. I don't quite know how they do it on their end, but it can be done. So you could invest in $100 into I don't know, whatever stock, let's say um, Whitehaven coal or Stanmore coal in Australia. You could buy a portion or just one share. I think that generally like CFD providers will do that. Yeah.
Mm,
So there are ways of doing it. And even with just a small amount. The trick, even if it's just $1,000 or even like $500, the trick is to get skin in the game. And that's when you have the emotional attachment and that's when you learn.
mm,
Um, how do you learn to do operate a computer? You actually have to click the keyboard with your hands. You can read all you want and watch all you want, but until you actually come to, you know, put your hands on the keyboard, it ain't going to sort of register. So that's what I would say.
mm. Actually, just and then of course listening to podcasts that you and your colleagues do would also be highly recommended. Finding people that you respect that have had a lot of experience. Oh, they've just got youth on their side. Yeah.
Isn't it gosh, it's a wonderful thing because of youth on this side. They got so much time, up their sleeve. Now, I'd still like to think I've got time on my side too. I'm, not that old, but the wisdom comes to you from, gosh, I never had a mentor. I never had someone who could teach me, how to invest. It was all done from, from the University of Hard Knocks. And I think that maybe that's a good thing, but you think, geez, I don't want my kids to go through the same shit I went through. So, that's why you try and give them a helping hand. But then sometimes you have to go through University of Hard Knocks to actually understand. I
Mm.
don't quite know. I guess everyone's different. But
It's inevitable that one gets that, but to be shown by example, um,
what what's
an easier road to take, so you're not going to waste the time and the money that,
that's
the
right.
likes of us. We didn't come into this until, I don't know, maybe 10 years ago because we didn't grow up in that kind of environment. And there was no internet. Nobody could tell us. It was like the secret club, and we didn't belong to it. So,
Gosh, I when I first started, there was a broker called it was Buttle Wilson and Co. in Auckland, and now they've since gone. I think they became UBS or whatever. Anyway, so I remember having a this is crazy, Christine. I was 16 years old, and I would have to phone up. I get home from school at 3:30 or 4 o'clock, right? Off the bus. I would have to phone up the broker to put the trade on. All right. The next day, or what would happen? You'd receive a letter within a few days in the mail. We've bought, I don't know, X shares of Briley for you, or Fletcher Challenge, and you had to actually, I had to go to the bank. I had to get a leave pass to go from the school to the bank, get a bank check, right? Get the Okay, take that to the post office and actually physically mail that to the broker. That's how that was a trade. That's how it worked.
mm,
I actually can't believe I used to do that. Anyway, so yeah, and then obviously these days it's so easy. Electronically, you can just do it. Now, the problem, of course, of that is because it becomes very easy to buy and to sell. So there's downsides to that as well. But yeah, look, there's no excuse. Back in my day, it was a very good excuse. It was damn difficult
mm,
for a kid to do that sort of thing. But these days, it's quite straightforward.
mm. Yeah, we were just told we'll put money in the bank every week,
That's right.
and that's
Yep,
it.
yep.
But I,
Interest, that was it. Yep.
but I'm
Well,
fascinated, Brad. You were 16. How did that come to you when you were 16?
you know, I just, I love the farm. I grew up on a farm. Then I just realized that, of course, at that time, it was in 84 when Muldoon lost the election and David Longy and uh, what was his name? Minister of Finance, Trevor, was it?
Mallard.
No, no, no. What's his? Oh gosh,
No.
wasn't even Trevor. No, it was Roger
Douglas.
Nomics. Roger
Yep.
Douglas. There we are. They came in. Anyway, farming wasn't on its knees. The point being, farming was on its knees, and I just, you know, I thought, no, I don't want this. I do not want to grow up like this to be a farmer. I want to make money. And at the time, of course, the share market was raging. It was all the rage. It was like, okay, well, this is how to do it. Now, what I'll also say is, yes, you can make a lot of money and do very, very well and set yourself up so well when you get to your 50s or so. But obviously it takes time and it takes a lot of heartache and it takes a lot of fortitude. You go through periods where you won't make money for a couple of years. You might lose money for a couple of years, or maybe even lose money for 3 years. Doesn't happen very often, but it can happen. And that, when you're losing money, when you're not doing so well, it's very easy to chuck and tell, going, "Oh, stuff, this game is rigged. It's not for me. It's too hard." But if you stick at it, for some whatever reason, you have this tenacity to stick at it, then the rewards are there. But you just got to stick at it. Um, Whatever it takes. I don't know. I guess it takes a special type of person.
Mm,
Um, the other thing also, which you'll find difficult, is that there's no one else to talk to. I certainly didn't have anyone to talk to when I was growing up about investing at all. Um, so it becomes like a solo sport as such. where it becomes you believing in yourself and doing whatever it takes to make it work. I, Maybe I'm getting a little philosophical, but yeah, it's gosh, uh, if you just stick to it each month, put in some dollars into the so-called market, even if you're just buying, quite frankly, an index fund. Now you can try your luck in picking stocks and out of favor things, big cap. Usually it's just like big cap stocks, fallen darlings as such. You're buying them when no one else will dare touch them. You hold them long enough, you'll make good money. But then another way of doing it is just buying a good old-fashioned index fund with dividends reinvested. Now you can buy the NZX, NZSX. What's it, 40? There's index tracking funds in New Zealand that trade on the New Zealand Stock Exchange, which you can buy. And so those, every month putting a few bucks into those, just consistently, putting say 5%, 10% of your money into those investments. Warren Buffett's, he said that, the average person's probably better off just to buy an index fund every month. Just doing that consistently for like 40 years. Okay, so 20 plus 40, that's 60. So after, over 20 years old, you're putting in 10% of your money every year into an index fund. Lo and behold, come 60 years old, you've got quite a substantial amount of, and then the power of compounding, then you start to realize what it's all about.
Mm.
Now, this sounds as boring as hell. And I just wish that's what I'd done. Now I've made up for lost time now type thing. I've, made very, very good money. But again, just the easiest way of doing things by an index fund. As time goes on, be able to get a little more experience. You can, delve into buying out of favor stuff, which is what I do now. And the returns have been better than buying an index fund, but there's a lot of work involved with that as well. So time is pristine time. This is one of the good things about it, a kid who's like 18 years old, 20, 21, 25. Time is on your side. Use it because you don't understand it. The power of compounding is just an absolute wonderful thing, and you've got the whole world ahead of you when you're 25 years old because you've got time on your side.
Mm. 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 Even more so when there's still, the home educating community can start these things really early because we can we can curate our own curriculum based on what the kids need, what their strengths and their passions are without ever compromising the basics. So they can actually get a really good head start in subjects like that. And it's not like a tag on the side. It is part of your curriculum because within the whole subject of finances is history. There's a lot of reading material to do. There's maths involved. There is so much in there that can be easily put into a curriculum rather than boring
Yeah.
old textbooks. So, yeah. Is it a good time to move into recommended reading then?
Well, there's recommended reading for someone who's 55 years old, and there's recommended reading for someone who's 20 years old. So what the hell are they? Okay. There's one, there's a few books that I would like folks to look at. And these are books I've got my boys to read. I don't know if they've ever taken much notice of it, but anyway, I'll get them to read it in a few years' time. There's one book called by an author called Michael Malboson. Uh, what's it called? It's Untangling. What do we got here? Michael Mal. Okay, what's his book? There we are. It's called The Success Equation by a guy called Michael Malboson, written back in 2012. It's untangling skill and luck with business, sports, and investing. That's one of the most important books I've ever read. Um, Other books. So um, there's an old book called The Art of Contrary Thinking. by a guy called Humphrey B. Neal, which I read back when I was 20 years old, strangely enough, one of the first books I read. And that was a big influence on me. Um, um, and the other most important thing, so there's an author guy by a guy called Howard Marks. And he's written a number of books, a very, very successful investor. He wrote the book called The Most Important Thing, um, Uncommon Sense for the Thoughtful Investor. So those are some books you can look at. You'll notice all these books are not like hardcore valuation books, etc., etc. It's more investing strategy and what have you, and how you look at the world.
Mm.
What
Yeah.
else? Fooled by randomness. Now, this might be a bit above, 20-year-old, but there's no numbers involved. But it's called Fooled by Randomness by a guy called Nassim Taleb. Also a great book. Those would be good books to get one started.
Chris
Can't think of anything
recommended
else.
The Creature from Jekyll Island to
Oh,
help
yes.
understand the history of it. And something a little bit lighter, but pretty profound was Whatever Happened to Penny Candy. He recommended that one too, which
I don't even know that one. So what was that one about?
Whatever Happened to Penny Candy? Basically, it used to cost a penny, now it isn't. Why?
Oh, right. Okay. Yeah,
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 yeah, yeah.
yeah,
And I'm listening to Howard Marks at the moment on Audible, so it's easy to get the information. It's just there's so many books to choose from. So hearing like a bullet point list is so helpful. Thank you.
yeah. That's enough. I think I could go on, but
Mm,
those would be a very, very good start.
all right. Any more pearls of wisdom, Brad? What would you tell a homeschooling family wanting to set up in this subject?
What do I tell them?
Mm,
Well,
anything else?
look, imagine, okay, the thing is, you want to take a long-term perspective to things. So just imagine if a kid opened up a brokerage account and they was taught every week, I think it was, I remember, recall this, Christine, remember when we were growing up, we had the ASB, okay, we had the ASB bank, and we had these little envelopes. Every week we had to put money in this little envelope thing, and then a person from the ASB would come round to the school and collect all these envelopes.
Yeah.
So you take it back, and the money would go into our bank account of the ASB, or had this little bank book. But it was a wonderful thing, Christine. When I come to think of it, it taught us from a young age to invest every week, and even if it was just 50 cents. Oh, Mum, we've got to invest, it's our it's a banking day today. That's right, it was banking day. There we are, every Wednesday or it was. And we had to put something in, whether it was 20 cents or 50 cents or a dollar, like, something like that every week. And imagine doing that for 5 years or more. But if you do the same thing, right, you do it and you think, okay, every month I'm going to put 10% of my money into an index fund. Boring as batshit. Where will I be 40 years from now? Okay. Or where will that kid be 40 years from now or 20 years from now? That's going to get them ahead. Now, it's a discipline, it gets them into a discipline of investing. It's not hard, it's just consistency and compounding. And we haven't even talked about Bitcoin. These fads will come and go. Um, and you won't be involved in these fads. You'll stay away from them, and by default, staying away from them means you just won't lose money. There we go. And
Mm.
the other one I would say, perhaps the book of the tortoise versus the hare. What I've learned, again, all these pearls of wisdom coming to me now that I'm actually thinking about it. There's little books you read. there was meaning in them. I remember my grandparents reading me the book, The Tortoise and the Hare, and the emperor has no clothes and things like that. Now, I think of the analogy of a tortoise and a hare. The tortoise won the race. The hare, well, that's investing in concept and, the, essentially investing in the next big thing, the bitcoins, the AI stocks, and so on and so forth. But it was the hare, the boring, consistent, just plodding along, won the race.
The tortoise, yeah, yeah, yes. And there's a reason those stories are timeless.
There.
eh?
Read your kids' books. I wish I could read my kids' books now, but they're too old. That's gone. So yeah, the little things like that, and just consistency and never giving up, having a long-term horizon on things. Those are just powerful, powerful things to teach a kid.
Mm, mm. They're good life disciplines in themselves. Consistency,
Yeah.
commitment, even when
Yes.
things aren't going well. Um, that they're just good life skills to have.
That's right.
Mm,
That's right.
mm,
And you think, oh, I'm putting away 10% of my money well, not every month, but 10% of your money every year. So, you know, every month you're putting away, well, every month you're putting away 10% of your pay packet. You just imagine we never had that money in the first place. So, if you're getting, I don't know, let's say $2,000 a month, you put $200 into your investment account, and you say, well, look, I've only got $1,800. That's my salary. So you live within your means. Um, so many things there. I wish I'd, had that leg up when I was a kid, but
mm. The good
there we
thing
go.
is, though, Brad, is that we get to start these habits and these traditions and the deliberate putting into children and grandchildren and great grandchildren. We get to do this whenever we decide to do it. Just because I grew up in that kind of working class family that didn't know, it doesn't mean that my family way down for the next 150 years also has to be caught inside that trap because trap it is when they're away. So it's playing the long game. It's not just your children, it's your grandchildren, great
It's playing the
grandchildren.
long game. It's playing the compounding game,
Ah,
Christine.
yeah, the compound. Yeah.
Only now do I realize it all. After all these years, the power of compounding. Well, okay, I've realized this a long time ago, but I just wish I'd realized it when I was 20 years old.
Mm, okay.
You
Yeah.
and at 20 years old, imagining, okay, so if I do this for 20 years, it gets me to 40, where I'll be when I'm 40. And hello, 40 comes around, it's like, shit, that went quick.
It doesn't feel like it when you're 20 though, does it? But that's the
No,
important thing. That's what behooves us to make sure we teach our children these things. It's on
yep,
us.
yep,
Yeah.
it is.
Mm, mm. Oh, Brad, thank you. Thank you so
Bit of a
much
bit of
for
a
your,
bit of bit of a bit of a different way of approaching the whole Bitcoin thing, isn't it? But there we go.
but it's unpacked exactly why, hasn't it? It's not just because, oh, Brad's anti-Bitcoin. It's no, 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 no. Hang on a minute. There's other ways of looking at this. Please just stop and think and look and learn. Yeah.
That's right. That's
So
right. Yeah.
thank you.
Yeah. Thank you so much. What a pleasure.
Yeah. Thanks, Brad. Catch up another time. Bye bye.